Welcome to the Citadel podcast, where we talk about the latest trends in real-world assets and crypto with industry experts. Today, we are pleased to have Bernard Soo with us. He's an ex-banker and currently a contributor at Citadel. Welcome to the podcast, Bernard.
Hi, George. Thanks for having me here.
Why don't we start off by you sharing a little bit about your background, your experience, and basically your story, how you got into crypto.
All right. So, as you just mentioned, I was in banking for more than 18 years. I was an ex-private banker and then went on to wealth management department to do investments product for clients. I was the head of wealth proposition and also head of online equities with Standard Chartered Bank. After which I quit banking. I moved on into the fintech space. I was at the Fintech Association of Singapore as a board member briefly, and I went on head on doing fintech training, consultation, and start building platforms. So now I'm a Citadel contributor.
Great. I'm curious, how did you first kind of learn about blockchain stuff and what got you interested in joining Citadel and work on real-world asset-related topics?
I think I first encountered blockchain when the Central Bank of Singapore started exploring blockchain in the payment space. Of course, the Central Bank was trying to encourage banks to start adopting blockchain. It got me really interested in technology. Later on, in recent years, the Central Bank was pushing towards the tokenizations of securities and digital assets with the banks. So that got me very interested, and I saw a lot about what blockchain can do as a technology. And being a securities guy, a wealth manager, I think there's a lot of synergy whereby blockchain can contribute to the wealth management space.
So how did you, I know there's several different platforms that are doing real estate tokenization. There's some different projects working on US Treasuries tokenization. What led you to Citadel specifically?
How I got to know about Citadel, my good friend Joel is a co-founder from Citadel. Citadel is basically a DeFi real estate tokenizing platform. And when Joe started introducing to me about what he has co-founded, the platform, the technology behind, I was very impressed and blown away. It's very different from all the projects I've seen out there. And of course, real estate is a very big opportunity out there compared to the rest of the securities like equities and bonds. The real estate market I think it's around 326 trillion. It's way bigger than shares and fixed income. So I definitely see the potential there. And the platform, the expertise, the team, the Citadel team is actually a great team, and I'm full confidence in that. And that made me want to join them.
Yeah. Tell us a little bit about the team's expertise in real estate, because I know that real estate tokenization, these types of topics have been talked about for over 5 years, I think. And usually these things have been led by technologists who have a vision of what's possible, but they don't really know the practicalities of the law, the regulation, and on-the-ground complexities of real estate and things like that. So what are your thoughts on that?
Exactly, George. In fact, when I was doing a lot of research into this space, I spoke to a lot of founders, co-founders. They're all technologists, and while they know the technology very well, but the use cases that they develop are securities, real estate, and they have not sufficient knowledge in this space, and there's a lot of technicalities behind that. There's a lot of regulations that's binding certain securities which they are not aware of. Whereas when Joe, I know he's a real estate expert, and he's very proficient in the whole real estate industry. He has managed a PE, a private equity fund in real estate. He's been with the real estate developers, so he knows his stuff. He knows the market, and best of all, he also knows how to leverage on technology, pulling technology together with the legality and the market. So I guess that's where Citadel is. There's a lot of experts behind that's in the team, and I'm very confident of that.
So one of the things you said is that there are quite a number of potential advantages having tokenized real estate based on your deep experience in wealth management and in banking. Can you share some of your perspectives on the pros and cons and what tokenized real estate can enable that is currently not possible?
Well, for a start, we as wealth managers, we know that real estate is highly illiquid. So as an asset class, it's just a lot of inefficiency out there. A lot of our clients, they bought a lot of real estate and the money is stuck there. So using blockchain, I feel that the efficiency, the market capital efficiency can be increased a lot. At the same time, using blockchain, linking buyers to sellers direct, it can create a new world of liquidity, and it simply make something so complex, the legal aspects of buying a real estate in any parts of the world, something so complex can be reduced, at the touch of the fingertips. I think there's a lot of benefits that the blockchain can bring to the real estate realm.
Got it. So based on these advantages, why do you think that real estate, tokenized real estate, hasn't seen mass adoption so far?
I see, ironically, people who are interested in real estate or can afford real estates, they are basically more affluent and older. The way they perceive real estate, it's a hard, tangible assets, and they are so used to the process of house viewing, talking to agents, comparing prices whatsoever. So they're used to that process. Suddenly, it's quite mind-blowing that all these processes are taken away. You don't see any lawyers, you don't see any agents. Everything is on the screen in your platform, and you make a decision then. So this is something that's new to them. But having said that, the same group of clients, they are also very used to investing into REITs, real estate investment trusts. So that we try to bring this new concept of real estate tokens to them in the form of a REITs, yet better than a REITs, because right now what they can do is they can invest into a single property that they like. They may not fully like all the underlying assets in the REITs. And they can also build their own REITs per se. They can buy a few different real estate tokens and form their own portfolio, and they will take up the role of the REITs manager themselves, manage the portfolio. And of course, there will be a lot of cost savings if there's a lot of charges involved in buying a counter on a stock exchange, a REITs counter per se. There's a lot of performance fees that's been taken away, financing charges. All these will be taken away, and there's a lot of value that was eroded that will go back to the investors right now.
I want to touch upon one of the things you mentioned before, which is you mentioned many of these real estate investors, they are very familiar with the current process of the house viewing, the legal paperwork involved, and there is perhaps a level of familiarity, a level of trust with that process. What do you think, would you say one of the challenges right now is helping these types of people become more familiar and trust this new process? And what do you think is needed to help that happen?
I think what we do right now is doing a lot of education to the investors. Tokens right now, it's a bad word, because of whatever happened to the Lunar Terror. So we try to educate them that tokenization is a technology on its own. The real estate tokens are asset-backed tokens. So something that they can take comfort in terms of valuation, and we will have to educate them on how do you find value investing into real estate tokens. So this outreach, it's what we do right now. And even when REITs came along many years ago, there's a lot of education done to the investors at that time. After 1-2 years, they're so used to it, and REITs, like right now, it's very common.
So I'm glad you mentioned REITs, because oftentimes when I speak to people about tokenized real estate, one of the first things people say is, how is this different? How is this better than a REIT? I can buy a REIT through my brokerage account and get basically exposure to a basket of different assets that are under this REIT. Right? I may not know exactly how it works, but basically I have some kind of exposure to a set of different properties. How would you answer that for these folks?
Okay, I think first of all, for REIT investors, they can choose a REIT, no doubt, a different portfolio of different real estates, but they can't choose the underlying real estate that they like. So that's number one. Number two, there's a lot of charges that they may not be fully aware of in the REIT space. For instance, it's written in the prospectus that certain REIT fund managers, they will charge up to 25% of performance fee. But the investors are generally happy getting 5% dividends every year when it could have been 8%.
Wow, 25%. So that's almost like the hedge fund model.
That's right. That's how much the portfolio managers, the fund managers make. And all these are written in the prospectus, which is like 1 million pages, and nobody bothers to read. So there's a lot of income that was eroded from that asset that they're investing into. And I guess a key differentiator for Citadel as compared to the REITs is ultimately the REITs, the fund manager, when they choose an asset, is based on the valuation, of the real world, and they invest. In Citadel, we believe that real estate is valued higher on the blockchain. Why so? For instance, a property is worth $1 million by real world valuation because of the risk-free rate, because of the rental it generates, and the long-term prospects. So $1 million, and the REIT manager will just invest based on the value. But for Citadel, we don't just tokenize that property into 1 million tokens, $1 each. For the real estate tokens, we explore more use cases. For instance, that tokens, the real estate tokens, it can be used to contribute back to the liquidity pool, to play the market maker role. So that's another use case of real estate. And we are as we speak right now, we are defining more use cases to unlock the full value of that real estate token backed by the title deed as an underlying asset. So that's something that we are passionate about, to build more use cases on the tokens to fully leverage and capitalize on that value of the real estate title as an underlying asset.
Got it. You mentioned earlier that there's different types of challenges faced in terms of mass adoption, and that Citadel is investing quite a bit in education for investors to understand how the process works, so on and so forth. What are some other pain points that you foresee for Citadel or for the real asset sector in general in blockchain? And what are some of the things that excite you the most about assets?
So, good question. So basically, why we haven't seen mass adoption right now, it's first of all, cryptos and tokens, all these are not understood completely by investors. They would associate a crypto or real estate token to Luna Terra. So that struck a lot of fear to our investors. At the same time, for Citadel, we are a DeFi, meaning that decentralized finance. Clients are so used to banks, the middleman, the REIT managers, whom the clients, investors take comfort in, but also they came at a high price. So this is something that the DeFi space struggle with to educate clients. There's a lot of perks going DeFi. And CeFi definitely have its own risks. We see a lot of banks collapsing. They're pressured by P&L. They have to generate a lot of returns every year, and they took risks unnecessarily, compromising the same investors we are talking about. So we need to really get investors to be aware of the risk for DeFi and also for CeFi, and to encourage them, to help them have that perspective so that they can make a better decision why they should come invest onto the Citadel platform. So that's two things that we've seen as a challenge towards mass adoption as yet.
Got it. I'm curious, you have a lot of these discussions with the traditional finance investors, family offices and so forth. I'm wondering, as you know, the BlackRock Bitcoin ETF has been used quite a bit the past week or so. And I'm wondering if this has been kind of raised at all, and if this, what kind of impact this has on the credibility of the entire industry. And just curious if you've seen some of the reaction, if this signal from BlackRock has helped them kind of become more comfortable, or if they had any questions about this.
Actually, it's a good thing that the big financial institutions are jumping in the bandwagon. So it just proved to show that they recognize cryptocurrencies is a way to go, and it gives some level of confidence to retail investors. So that's number one. And with the big boys coming in, it just means that there'll be more funding, there'll be more liquidity into this space, pushing wider adoption. So first step, we've seen the big funds coming in, and who are they going to distribute? It's going to be the banks. So once they reach out to the institution banks and then retail banks, that's when the customers, the investors will start to embrace and accept crypto funds are here, and crypto is going to be another commodity that will be traded, and this is good. And because of this, we've seen a lot more investors getting more receptive. This year, they started talking to us about DeFi, about tokenization, and real world assets. It's even easier to accept by all these investors other than as compared to cryptocurrencies right now, because traditional investors still like some form of asset-backed tokens backed by real world assets, and this gives them a lot of comfort in terms of the pricing, the valuation, but they're still struggling with the valuation of a Bitcoin, what exactly it is. And so it's I think overall the environment there will be more information in this space, and people will start to understand.
You mentioned a lot about kind of helping the folks in traditional finance, helping the real estate investors in the traditional field to see the benefits and understand how they can invest in real estate, but via this new channel, via this via blockchain. What are your thoughts on the people who are very comfortable with the crypto natives? And do you see there being a lot of demand for real estate for crypto natives, or has it been very I'm curious to see if there's been a lot of interest or demand from crypto natives.
Good question, George. In fact, the crypto natives, we've seen two groups of them. Obviously, a lot of them lost money last year when Luna Terra crashed, and some even got scammed by certain projects they're not familiar with. So crypto natives who are invested over the last few years, in terms of the expectation what they have made last time, it could be a few 100% overnight. And some still hope we hope to have such a tremendous gain when they invest into certain projects. So we have to educate them as well that real world assets it's somewhat backed by real world underlying assets. It's quite unlikely that the tokens will gain 200-300% overnight. It's quite very unlikely. So we spend a lot of time educating them. The good part is they are familiar with crypto. They understand the concept, the value cryptocurrencies bring. And just by putting real world assets besides crypto, they pick it up faster. Traditional investors. We do see a camp of crypto natives now seeking comfort real world assets, something that's more palatable for them. They've been through a lot of volatility for the last few years, and suddenly their risk appetite reduced. They want something that's more stable yet able to give higher gains than the traditional investment products out there.
Yeah, that makes sense. Great. Bernard, recently I noticed that there was a detokenization that was executed on chain by Citadel. Can you tell me a little bit more about why that is significant?
Essentially, what detokenization means is the token holders are able to redeem the real estate title deed at will. Meaning to say, if someone bought out everyone 100% of the real estate token, they should be able to claim the title deed with the law firm at any one point they intend to. So that's something that it's important, and we always in our outreach to investors, we always educate potential tokens investors that detokenization will be the litmus test of a real estate tokenization project. So what happens for us is an investor of our real estate token was really interested in the property. He felt that at the price it was trading at, it's quite undervalued. So he decided to exercise his buyout option. So for our platform, if you hold 30% or more of the real estate token, you have option to do a buyout. During a buyout process, the investors get to offer a price to the rest of the token holders. And during that 28 days, the token holders can choose to accept or reject the offer. In this case, all the token holders were happy, and they happily accept the offer, and the buyout was complete. It is important because it shows the legitimacy of our tokens, our real estate tokens, in the eyes of the law, that the real estate token holders have the right to claim the title deed when they buy out 100% of. So this is something that that help us, gain more confidence with our investors who have been watching us through this time. So we have a lot more inquiries after that. In fact, our UK properties were snapped up in 10 minutes, just in 10 minutes by 3 investors. The confidence came back. They were eagerly buying the properties off our platform.
Yeah, I mean, I saw the news of the property in London. Maybe you can share a little bit more about property.
Actually, for right now, in the real estate space, I believe most parts of the world, the financing cost is high, interest rate is very high. The banks are more conservative right now. They are taking a longer time to approve the mortgages. Most of them, they do not approve the mortgage. So there's a struggle right now for real estate holders who wants to, for landlords who wants to sell their property. They are unable to sell it at a price they love to, because right now the buyers are unable to take a mortgage and buy from them. As a result, in London, we saw that the property price came down to 40 to 50% for a cash deal. So it's perfect for us because on our platform, we crowdfund, we raise the funds, we buy in cash. And this entitles us to buy very good quality properties in central London at a huge discount. All our investors, they saw that, they came in, and they know that it's all trading at a big discount right now. And we believe that this will usher in a new way of investing into international properties like those in London, which are traded at below 40 to 50% off right now. So it's a good thing. It's good for investors to come in at this juncture.
And I mean, for this particular property, it was very interesting. I mean, I'm not an expert in London property there, but it seems like it's this particular unit is located basically near the Royal Palace.
Oh yeah, it's in prime spot, central London. It's in Mayfair, Bulgaria. So it's just 10 minutes walks to the Buckingham Palace. It's a shop house. I think the market price was the retail price is around close to $6 million US. Through our platform, we are able to procure it at 4.2 million. That's why a lot of investors, the three investors, came in with millions and bought it out.
Is this something that users can expect to see more of, like these types of properties coming on the platform?
Yes, in fact, we see a lot more because of this success case. We have built a reputation in central London. The agents love us. They represent the landlords. They saw this being stepped up in 10 minutes. We were able to transact very fast. So the agents are coming to us with very good deals to be listed on our platform. And at the same time, we hear a lot from our investors asking for more London properties. So we're gonna marry these two together. Good premiums, good properties, huge discount right now for our investors community.
Yeah, I'm just reading up on Belgravia Media. There's quite a history as well as some information about its real estate being one of the most expensive, costing for around £5,000 per square 2,000. I'm sure it's a lot higher. So yeah, I think that's fascinating. The ability to allow access for anyone asking to buy a piece of a proper place like this. Very interesting. I know that probably around the world, luxury real estate, prime real estate is holding up. But as you know, and I'm no bond expert, we've seen bonds go through maybe one of the worst in history recently due to interest rate hikes. We've seen some turmoil in U.S. regional banks. I'm not exactly sure where they stand today. My understanding is there's quite high market losses, stuff of that nature. And I'm not really sure where real estate, whether residential or commercial, stands today. But I do know that high interest rates do tend to eventually cause these industries to take a hit. But I want to get your perspective on where you see the real estate industry today. Is it a good time to buy?
Good questions. In fact, the real estate is something very close to heart to a lot of investors, especially the Asian investors. They tend to like real estate a lot. They have a lot of real estate in their portfolio. And with the financial markets so depressed for the last few years, we've seen investors that have they started to offload their traditional financial products like bonds, shares, and start to go into the real estate. And why so? Because they know that the market right now, the interest rate is so high. The banks are not putting out loans like before, but they do recognize that the fundamentals for the economy, like London, it's still sound. So there's a lot of interest in London, central London real estates, and the transaction prices have shown that there's a lot of properties right now in London trading like 40% off the real value because a lot of real estate owners have cash. They are unable to take a loan to refinance, so they are forced to offload the properties at discount, but specifically for cash deals. And that brought a lot of affluent investors to relook into real estate in London to funnel cash to buy real estate. And a lot of reports out there forecasting that interest rates will probably have one last hike maximum probably by end of Q4. Next year onwards, it should see it coming down. And when interest rate starts to come down, the retail investors are able to borrow, and that's when the property price will start to come back up. So to investors right now who are looking at all these discounted properties, it's actually a very good time to enter if you have cash, or if not, to the Citadel platform, crowdfunding, and we go in, buy on the cheap, just pan out until next year. We should be able to see exciting returns for our investors.
Right, very cool. Not financial advice, but yeah, I mean, I think that the ability to access prime real estate. This is real estate locations that have historical value. They have kind of hundreds of years of history in terms of being seen as a store of wealth. I think that's fascinating because an average person really never be able to it would be hard to know where to start a piece of this type. Great. Well, thanks so much for your insights, Bernard, on the real estate industry, on real world asset space, on real estate. Is there anything else you'd like to add before we go?
Well, I just want to say that tokenization is a big trend right now, and it's going to last for a long time. It's like internet being introduced early 2000s. There's no stopping it. It's not just the Singapore central government that's driving it. It's not just the big funds. We've seen a lot of governments all over the world jumping in the bandwagon to promote tokenization in securities, digital assets. It's going to be a big thing. In fact, I'm so excited when I heard about this. I left banking to do this, and I firmly believe that it's going to change the way investors going to invest in the near future. It's going to reshape financial institutions, how they operate. It's going to make a lot of institutions rethink their business model. And to benefit the investors, as well as the stakeholders in this ecosystem. So real estate tokenization it's up and coming. In fact, it's here right now. I encourage you guys, anyone out there, to start reading about it, understand more, and yeah, it's going to be a fun space to catch in a time.
Great. Thanks a lot, Bernard, for your insights. Take care.
Thank you. Thanks, George.